We've just crossed 9 a.m., everyone. August CPI print coming in at 8.3% year over year versus 8.1% expected. Let's bring in Yahoo Finance's Jen Schonberger to take a closer look here at these numbers. Jen?
Good morning, Brad. Prices in August showed signs of easing thanks in part to a cooling in gas prices, but still up overall. If you look at the numbers year over year, the consumer price index rose 8.3% in August, marking the second straight month of deceleration from 8.5% back in July. Increases in shelter, food, and medical care indexes were the largest contributors to the monthly index. Those increases mostly offset by a 10.6% drop in the gasoline index. Now, if we exclude those volatile food and energy prices, the so-called core CPI, that was up 6.3% in August. If we look on a monthly basis, headline CPI up 0.1%, but looking at core up 0.6%, which was actually bigger than what we saw in July. Now, breaking this down category by category, looking at a year-over-year basis, food continued to go up, rising 8.3%, with food at home, our grocery bills rising 11.4%, so still hefty grocery bills. The energy index falling 5% over the month as gas, as I mentioned, came down, but electricity and natural gas actually increased, so getting a net of a 5% increase there. Overall categories that saw price increases included shelter, medical care, furniture, and new cars, which were up 7%. And among the categories that declined in August, airline fares, they were actually down 4.6% after falling at 7.6% back in July. So while this may be a little bit of welcome news for the Federal Reserve here, still seeing hot inflation readings, guys.
Yeah, the shelter number really stood out to me because that's one of the stickiest parts of inflation, right? You mentioned the year-over-year number up 0.7%. If you look at the month-over-month advance, we were hoping for that month-over-month little bit of a decline in inflation. So this is definitely disappointing for people looking for relief. You mentioned the Federal Reserve, and of course there's a lot of read-through from this for the Fed. Most folks in advance of this report were saying the Fed's going to go 75 no matter what. And it doesn't seem like there's anything in this report that would dissuade them from doing so.
Yeah, Julie, I think this underscores they will go by 75 basis points next week. While this may be welcome news that there is a slight bit of easing, again, 8.3% on that headline number, down from 8.5% that we saw the month prior. The Fed really needs to see inflation come down much further and needs to see several months of that before they are convinced that they can come off the hiking that they will need to do. So we'll certainly hear more from the Fed chair, but I would expect the Fed to remain hawkish here, remain committed to the fight against inflation.
Thanks, Jen. Appreciate it. And, you know, as you go through these various numbers and components that we're seeing here, of course, the energy relief is being reflected in these numbers, but it takes so long for that relief to then trickle through to other things, right?
Absolutely. And the increases that we had seen, at least of the largest categories, increases in shelter, food, medical care indexes, largest of many contributors, the BLS noting within this report for the broad-based monthly alt items increase there. And so with all of that considered, you did see that 10.6% decline in the gasoline index. Food index, though, continued to rise. And so really what this spells out for the consumer right now, as we've talked with so many of our guests, and even economist Fed Chair Jerome Powell himself has also said that, individuals might have to be ready to kind of brace for or just navigate through this period of time that's going to be more extended than desired for some of the higher prices. Of course, we don't desire that at all. But at the end of the day, for what we're going to have to navigate through continually, the Fed noting it, some of our guests noting it, and we're going to dive into that even further with our next guest. But it's just the extent of time that the consumer can actually weather some of the higher prices. And that's a larger question as to when you will see that have more of an economic impact that is larger ranging as well.